Hi, I'm Mike Capizzola, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at some of the smartest money in the country and events at Icahn Enterprises, the quoted vehicle of Carl Icahn, one of Wall Street's true titans. Now, Icahn is a billionaire investor and a corporate raider who built both his reputation and fortune back in the 80s and 90s. Since then, he's carved out a reputation as a prominent activist investor for much of the last decade. Mr. Icahn is no spring chicken, having started his Wall Street career back in 1961, forming his own trading firm Icahn & Co. in 1968. Now at the age of 84, he's turned his attention to the issue of succession, and who'll take over from him at the helm of Icahn Enterprises. In true dynastic fashion, he hasn't had to look too far, with his 41-year-old son Brett waiting in the wings. Icahn Jr. is an experienced Wall Street hand in his own right. He previously advised on and managed assets for Icahn Enterprises, including his father's substantial Sargon portfolio, and he ran a hedge fund in partnership with David Schechter. However, it's not just a case of keeping it in the family. Brett Icahn is expected to take over from his father within 7 years, but he's also invested his own money into the company, buying 202,758 shares at $49.32. That's an investment of just over $10 million. The stock has risen over 5% since that news broke on October 1st and has also posted 4 consecutive new highs over that time frame. When legendary traders such as Carl Icahn pass away, their businesses often fade with them. However, that seems unlikely to happen with Icahn Enterprises. Carl Icahn remains the majority shareholder and chairman of the board, but he has clearly signaled his intent to slow down and eventually take a back seat. His son Brett is not returning to the fold alone, and will bring a team of portfolio managers with him to help run the conglomerate, which has over $21 billion in assets, generating over $7 billion in revenue. New deals have been thin on the ground of late for the firm. However, given the shakeout that the coronavirus has created in the economy, there are doubtless plenty of potential targets for the company to look at. For example, one of Carl Icahn's contemporaries, Nelson Peltz, has just taken stakes in 2 of America's biggest asset managers through his Trian fund. And activist investors like the Icahns rarely sit still when their competitors become active, as fear of missing out is nothing new on Wall Street. Currently, Icahn Enterprises shares are trading well below their year-to-date highs of $69.10, and the shares have not bounced back with the rest of the market after the COVID-19 related market crash. However, with younger blood and long-term planning coming to the fore now, perhaps it's time for the sleeping giant to wake up once more. But remember, always do your own due diligence before making any investment decisions. Safe trading.